Good morning, everyone, and welcome to another Bitcoin update by your host, Bleeding Crypto. Today is Monday, February 27th, and I hope you guys all had a great weekend. So on Friday, I believe it was Friday, yes, it was Friday. I did my second update on Bitcoin from the series that I started last week, and this is exactly where we left off the video. So we left off the video. We were actually right in this candle, if I'm not mistaken. Let me see here. This should be, yep, right in here. We left off on this candle here. We were touching the reload zone, which is the 618, 706, 786. Anywhere inside of here, we basically is our reload zone. So after our video, what we end up doing, we had a nice bounce. We did come back down and we confirmed the 618 a second time, and then a third time, and we bounced. This is why I did not want to get too ahead of myself. I wanted to make sure, like I said on the previous video, this needs to invalidate before I start looking for lower targets. So far, the price action is following retracements the way they normally do. They come back down for a continuation, for a more of an immediate continuation. We bounce off 382.50. For a more corrective move to the downside, it will be inside of this reload zone, and then we start heading back up. However, on the way back up, we now have a different set of rules that we want to apply, and we want to make sure that this isn't just a bounce to a new lower high. So what do? We're going to put, I'm going to put my rule set for a lower high. I'll change that in just a minute. So when I'm looking there, let me change this lower high. All right. Let's see here. Oh, no, excuse me. That's the wrong one. I got to go up to this one right here. This is the previous lower high. So that's going to be our high right here. So we have a high, low, lower high, lower low. Now we're going to go from our lower low to our previous lower high. And look at what we got. This is beautiful. This is beautiful to see the way the TA works out. Same way we just kissed 618 here on the retracement, we are kissing 618 here on our lower high rule. Do you see why these Fibonacci's, do you see why the TA and having your rule set makes a big difference on how you view the market? There's no need to get overly bearish or overly bullish until your setups are invalidated, until your rule sets are invalidated. We didn't get overly bearish because we were just expecting a bounce in here. If this would have failed, then obviously, yes, then we scrapped it, and we scrapped this plan, and we look for lower targets. No need to do that until that happens. Now, does this mean that we have confirmed a lower high? Absolutely not. This is a show of strength. This one candle here. I'm going to go to the 1 hour time frame. Okay, perfect. So this here, we don't need the 200 MA. This is more for higher time frames. Don't need that. Okay, so on the hourly time frame, we can see how this was a power move. And I'm going to explain what a power move is. A power move, basically, if you notice here, these EMAs, if you're an EMA trader, you'll understand this. If you're not, then you'll understand why we use EMAs and how they give us insight into the market. So this EMA here, these EMAs are very tough areas of support and resistance. If you notice here, when we hit up the 30 EMA from the underside, we were hitting resistance for 4 hours. We finally broke above it. We came back down, and then we tried it for the next EMA, which is the 50 EMA. We did the exact same thing, except we stood 8 hours of resistance. Then we finally broke through that. We hit the next EMA, 100 EMA, and we found rejection off of that. And we did that on each EMA until we hit the 200 EMA, which is usually on our lower time frames. The 200 and 300 are our last goalpost until we see a retracement back down. It's what we normally do. And we had here for 5 rejections off the 200 EMA, brought us all the way back to the 50 EMA. Now, this, I call it a power move, because rather than going through this whole sequence again of breaking through each one of these one at a time, it put it a 1 hour candle that broke in one candle through 1, 2, 3, powerful EMAs, the 100, the 300, and the 200 EMA, and still managed to close above the last EMA. So this to me was a statement that bulls are in control. And it was followed by, look at the volume, very decent volume. Now we hit our next area of concern, which is this 0.618 from our lower high rule. Again, not a big deal, nothing confirmed. This is expected. As a matter of fact, if you look to the left, look at, you know what, let me move this line. I don't want to crowd the chart with too many lines, so I'm going to utilize the previous resistance line. I'm going to utilize that here to help us understand what made a stop here. So we have confluence. We have the 618 rule, very obvious there. But then if you look to the left, look at all this area of support here. Look at this area of support here. Look how it supported the price action here. Look at the support. Always remember, guys, it's the inverse when you're going, whichever direction you're going, the support and resistance becomes the inverse. For instance, whatever was support, whatever area was support when we were above the price is now most likely going to become resistance when we're trying to get back up there. When we've fallen and we're trying to get back up into that area, the first area of resistance is usually going to be the previous areas of support, and vice versa. So the areas of support are usually going to be areas of prior resistance. So so far we're doing everything. We're following the path that we need to follow, and I am still. Let me go ahead to the 4-hour time frame just to clean it up a little bit better. I still am looking for a continuation. Now I refreshed this. I refreshed the HyBlock data because, as you know, I like to follow where the money is, and I'm gonna reiterate what I've been saying. This market is not being driven by spot. And you can, if you want to take the time and look at the data yourselves, you can, there's many different projects out there like CryptoQuant and Fire Charts and HyBlock and all kinds of data that will show you that the market is being driven by derivatives. So I'm not going to get into that right now and draw that out. You can do the research yourself. I've already done plenty of that research, and I'm just telling you what I have found. So the fact that we're being driven by derivatives, it's only logical that you follow the derivatives story. Now, the derivatives at the moment, the highest concentration of heat is inside of here, which is 24,650, inside of 24,900, which is this cluster right here, and then up here at 25,400. This still is significant heat. If you want to know how much heat this coloration is, all you have to do is go to the left of the chart and look at the shade of color, and then you can then relate it to the number here of contracts, so of dollar of value, better said. So we still have we still have good liquidity all the way up into the $30,000 area. The strongest being the bright yellow at the highest one is 25,400 is the highest of the bright yellow, which is the absolute highest that we have here on the chart. So there's no reason to continue to feel bearish or see the market bearish until we invalidate the retracements. And what did we do? We hit it right on the money. Now, here, if we don't climb above these three lines, so let me zoom out for a second here. Just because we hit here, and if we get above the 0.618, it doesn't mean that we've now confirmed the we've now broken through, and we're not going to have a lower high. These three are generally the ones that I look for. That's why I have these on my chart for a lower high. We could easily reject off of here or even off of here and still be within a lower high market structure and come back down and put a lower low. Once we do that, then this here becomes invalidated. This wasn't a bounce. Well, it was a bounce, but it wasn't a continuation. It wasn't an accumulation. It wasn't... It now signified just a normal 618 retracement. Now we've got a lower high formation. This basically formed our lower low. Now this formed our higher low, and so forth and so on. what do we use to measure an invalidation that this is not a lower high? Right here. The moment we break 25,576 and we close above it, we have now invalidated that this is a lower high, as we have broken the previous lower high, and this is going to be most likely a continuation. However, you're still not out of the woods, because now you have to contemplate that this could be a double top, and you can see it a little bit more clear if you go to higher time frame. So let's go ahead and do that, and I'm going to erase some of this. I'm not erase, but I'm just going to hide all of this stuff here, because we're going to look at just market structure. Because as we go higher on the time frames, since we made all of our notations on the lower time frames, they're going to get very crowded on the chart. So if you want to see what I'm referring to, look at market structure. Now, like I told you, if we break the previous lower high, does that mean we're out of the woods? No, we're not, because we could still come up into this area here, even here, anywhere between this top and here, and become a double top, and then bring us all the way back down into the 21.5 area. Typically, double tops, when they come back down, they come into the 786 area. So let's do that. Let's do that exercise real quick here. Let's do, it'll actually right here, we can utilize this because this was taken off the top. So typically, if we're going to double top, this could actually still stay on our chart. Actually, let's do this here. Let's move this over. Let's move this over, because this can still be useful to us. This way, it'll be a pretty good learning experience. So I'm going to do this. I'm going to leave this on our notes right here. I'm going to put this on here. End of possible double top. So if you guys are following along with what is going on, you will be able to understand what I meant here by end of double top. So which means that, just to reiterate, we can still go up, we can break the previous lower high, we can get into this area here, sweep this liquidity, even go a little bit higher to knock out some stops, and then come down here and hit 786 and then have a bounce. Now, if that happens, it becomes a scenario where most of the time when I look at a pattern like this, it's very similar to when I look at a bullish pattern, a W flag breakout. And we're going to talk about those in a later time. But basically what it means is that we're going to double top. It's a reverse move of that. So we're going to double top, creating an M pattern, which is inverse, obviously, of a W. Hit 786, flag out, and then continue to the downside. That is the most likely, it's a more likely scenario that's going to play out if indeed that happens. But again, I'm trying not to get too ahead of ourselves. Let's just wait and see. I just wanted to keep this here as a possibility so you guys can understand that even though we are bouncing and we are, even if we do break out of here, there's always scenarios that should give you, that you should plot out for both bearish and bullish scenarios. Because what happens a lot of the times is if you don't think a little bit of ahead and you look at this and this breaks, or better said, this breaks, you think, okay, this correction is over, I'm going in. We're definitely going to $30,000. And then we get a double top scenario and we come back down. So nothing is black and white, unfortunately, in trading, guys. There's so many things that affect the market on a hourly basis, really, even shorter than that, that you always have to keep both scenarios and understand what and how can happen. Meaning that we can hit here and everything looks bullish, even though we bounce here, and still be in a downtrend. And then it'll invalidate this move here. Obviously, the double top never happened since we didn't make it quite up there. And then we just basically erase everything and start over. Now, there is one thing here. I believe I added this after our show, so I'm going to go ahead and talk about this right now, is this line here, this diagonal trend line. Now, diagonal trend lines, I know some people don't like them. They don't believe in them. Let me go ahead and just erase some of these indicators. I don't like, there we go. When I'm trying to do these videos, I try to keep the least notes as possible, or the least interruptions on the chart as possible, as it becomes a little bit overwhelming for people who are not used to seeing all those indicators. They start focusing on that and not focusing on what I'm trying to explain, and it makes it easy and it makes it hard for people to understand what's going on. So I just plotted out this here. Doesn't really mean anything. Whenever I see areas like this, I just like taking note because this could possibly be an area where we bounce. And look at how funny, I just noticed this right now. Look at how we were talking about this possible end of possible double top. Look how it lines up at 786. Look how this could be a scenario. We come down here and we bounce off of here and we come up here. So all of these things here start becoming a possible future story of what we may see. So this is something we just keep on our line, just in the back of our minds, in case something comes down or doesn't work out, we don't get that continuation. Then we can say, hey, okay, we've got a couple of things of confluence that we want to look at here. We want to think of the 786. We want to think of this diagonal trend line. This could be an area where we will be looking at our next support, our support area. So it's always good just to have those in mind. But for right now, until this invalidates, or better said, until this bounce invalidates into a lower high, we are going to continue just to look for higher targets on both the bullish side, and for the bearish side, we're going to look for the lower high target. Other than that, guys, I don't have much. I'm trying to keep these as short as possible. I don't want to go into too much detail, but I just want you to have an idea of what I look for. I always look for the upside. Try to find some confluence. So I found the confluence on HyBlock, which is my leading indicator at the moment. Since it's derivatives driven, you have to pay attention to the derivatives market. You can't be looking at spot markets and assuming that this is going to follow spot when the derivatives is driving the market. And like I mentioned before, that is proven on the on-chain data. Now, I also want to make sure that I have a scenario for the downside so I'm prepared, so I understand what's going on. So I don't do like what most of Twitter does. They panic, or they overly bullish or overly panicky, overly bearish on every single 1 hour candle. I am pretty sure that after that 1 hour candle that we just finished having, everybody is now ultra bullish. Then we have another red candle and everybody comes ultra bearish. That's because they have no direction. They don't know what can happen. They don't have an idea of how to plot out these roadmaps. So obviously, all they can rely on is each hourly candle. If it's green, I'm happy. If it's red, I'm not. And again, it really depends on your perspective, because some people will get happy on a red candle because it means opportunity. So that's a topic for another time. So for right now, guys, we're going to leave it at here. We're going to come back on, let's say, maybe Wednesday or Thursday, and we'll revisit this. We'll leave these comments and everything the way it is, so we'll have an idea. If you're looking at this video, you'll understand what this end of a possible double top is here. We will hopefully have resolved this by Wednesday. I'm pretty sure we have. We'll be somewhere. We'll be either up here or we're going to be down here. And it's funny because when I say that, it's funny, people who don't understand markets, they will make these little comments. Oh, so it's going to go up or it's going to go down? Well, yeah, that's the market. They think that they're being clever by saying that. They want you to think, they want you to tell them exactly which way the market is going. And that just goes to show the ignorance of people. So whenever you read comments on Twitter, like the comments that people post, pay attention to those comments. Oh, so it's going up or down? Those are very ignorant people, because they're assuming that you're supposed to know exactly which direction the market's going to go. And a real trader doesn't know the direction of the market, but will make a case for either the upside or the downside. That's the job of a trader. The job of a trader is not to guess, or to know, better said, which direction the market's going to go. The job of a trader is to be prepared for either direction that the market is going to go. So I hope that's clear, and I hope those those ignorant people that make those comments can could take the energy and the time, instead of writing those comments, to learn TA and understand what it is, or stop following. Simple as that. The easiest thing is, if you want somebody who's going to tell you it's going to go here or it's going to go there, follow them. Don't follow me, because I don't know which way it's going to go. All I can do is plan for both scenarios and wait to see what the market gives me. I don't tell the market where to go. I basically just do whatever the market, be prepared for whatever the market is going to allow me to play. All right, guys, everyone have a really good day, and please like this video. Please hit the like button, and please subscribe to the channel if this information was useful, so I can continue to do these videos. I would greatly appreciate that.